Welcome everyone, I'm Giuseppe Basile, also known as the FIB Stalker, and in this brief video I'm going to review four of the markets that I follow. I'm going to review the SP500 E-mini futures, the dollar index futures, the silver E-mini futures, and the gold E-mini futures. So let's start from the SP500. As usual, I'll start from the weekly, and if you recall, this market is on a longer time frame. This market has been trading in extension long. If you follow my work, you'll know that we identified the lows in 2014 before the fact, the first target, and then again the lows in 2015, August and September here retested the 1832, and it was retested at the beginning of the year 2016. So this market is still targets above. As you know, this market seasonally could actually put a retracement. And when we look at price, we know that when we look at the daily time frame, we know that that retracement actually could come into from an area that into an area that would actually be an area of potential extension here. When we look at this market, we know that this market has participated at 1974. Price was it, and that's the reason why we saw profit taking and market not able to move above this 2170-80 area. So the market has corrected, and however, when we trace, when we look at the sequences and how algos actually smart money trade this market, we know that we have a potential area of retrace here, which could bring price into this 2010 area here. Now, when we overimpose the dump money model here, we see the reason why this market has bounced recently. This market is working out weekly areas of support from dump money here, and until this market actually stays, and it's better visible on the weekly here, until this market actually stays above this band here, there's no way it's going to retrace into the next area. And as I mentioned before, there are then areas that we want to look for. Some of them are areas which are governed or controlled, if you wish, by algos, smart money, which are these lines that I trace here. So we have 2010, 2020 here is the area where there is a potential participation from algos if this market actually will start a correction in the coming weeks, and that area would coincide with an area of participation from that money. So as I see at the moment, this market moving below 1983 has not hit the first target of this larger measure move, and a bear market in the SP500 would only be confirmed if the market moved below this 1772, and after that we would likely see a retrace. So this is the long-term view on this market. So at the moment, we'll just see whether this market is going to be propelled by that money here into previous highs, even higher. But this area might be retested a number of times, and if it breaks again, the 2020 is the area to watch. Dollar index. The dollar index has actually, as you know, the dollar index has been moving in extension higher, and that extension has been respected, and the extension is represented by this 94.53 level here. Has been respected for a number of times. We counted 6 times, and then recently in May, beginning of May, this market has broken down. So when that happened, we know that the market tends to retrace all the way the opposite 50% level. That's exactly what happened here at some point. From highs to lows here, we saw market participating at this 96.80, and then again pushing into this area, but was not able to actually push higher. That would have indicated a condition of lateral move, which would actually could actually resolve on the upside as well as on the downside. But at this point, at this moment, bears are still in control of this market on the smaller time frame. Bulls have pushed this price higher from 94.50. So the next area of potential resistance where we could see this market stopping is 96.78. When we look at the daily, we don't have really a lot of information as this market has been moving laterally here. So when we look at the area of support, the area of support that we saw before is this area here. It failed initially, but then it held. So this is actually has the potential to push price higher. On the daily, we saw something similar here. So the 94.80 being pierced. But the lower, the bigger time frame there and the bigger time frame here respected, and then also the daily 95.07 is being respected. So as you can see, this measure move here as a first target around that area of resistance. So we could see the dollar index continuing higher into 96.90 if you have longs trading with the US dollar. And so shorts, if you're trading majors that trade against the dollar, should be careful. That doesn't mean that they're going to move lower, but definitely if the US dollar moves higher, the euro dollar, for example, which is 59% of the dollar index, will move down. Okay, so the anticipation is this market retesting 96.80. Let's go to silver. Silver, very technical market, as you well know if you follow my work, with a sequence of measure move here, but on the daily and weekly, and we took advantage of it. We had participation, extension, failure of extension, and then the market came into the trend continuation area here again and broke price into the first and second target, and now we know that this market again is coming into the trend continuation area. So we should see lower price in silver, which is in line with what we are seeing at the moment in the dollar. So the dollar is supposed to go higher for a few weeks or days or weeks here, and again we have the exact opposite situation that we saw in the dollar index before. We have a high to low here with a participation around the 1990 and $20 area here, which is a first target right at that level of potential support. When we overimpose the dump money model here, we see that we have got this market actually that started pushing below the area which is controlled by dump money here, and that was obvious because obviously smart money is pushing this price lower and there'll be resistance initially, and as we can see this level has been tested twice, but now very probably this market is going to let go the weekly dump money are going to let go this market moving lower into 1768, and that could be a buying opportunity. But for now, if you're short, stay short and take your profits around the 1768 to 78 area here. And finally, gold. Gold is following same, of course, the same trajectory here of silver, as you would obviously expect. Actually, it's the opposite. The silver that follows gold, and we also know that silver is actually trading here. It actually has traded higher above. Sorry, gold, of course, has traded higher above this 1375, which is the violation of an extension chart here. And that's bullish for gold longer term. However, at the moment we are seeing a move lower that is likely to continue here and could bring price into the 1226 area again. When the dollar index correction is completed, we'll need to see whether the dollar index is capable of keep pushing higher. Fundamentally, that should not be the case, but price can do whatever, and Mr. Market can do whatever he wants, and we will see what happens at 96.80 here That's the area we're going to watch. And for gold, that area could correspond to 12.26, although this market is extended, so that level could come higher at 12.47. And when we look at the daily time frame here, we see clearly a participation of daily shorts around the 1347 area, 48 area here. That area held before the beginning of September and held again at the end of September. Here is pushing price lower into 1286. So if you are short these markets, you should keep the short maybe into 1247. This is it for this first group of markets. We have the S&P 500 dollar index, the mini future, silver mini, and gold mini futures. These four markets are future markets, and mind risk. Risk is always trader's job number one. Thanks for watching. I look forward to see you at the next video. Bye bye now.